While the world obsesses over gold breaking records and Bitcoin approaching six figures, a quieter and far more consequential shift has been unfolding. The media talks endlessly about stocks, crypto, and real estate, but these are simply the distractions, assets the ultra-wealthy moved into years ago. Behind the scenes, billionaires have already rotated into an entirely different class of investments. They are acquiring three obscure forms of power that don't glitter, don't trend, and don't fit the usual financial narrative, but become priceless when the system breaks. Farmland, water rights, catastrophe bonds. These aren't speculative bets. They are civilization-level hedges, the foundations of food, survival, and risk transfer in a world facing instability. And no one embodies this shift more than Bill Gates, who has quietly accumulated over 275,000 acres of U.S. farmland, more than any private citizen in the nation. Every acre he purchased follows a precise formula: superior topsoil, reliable aquifer or river access, and climate conditions that guarantee long-term productivity. From the Mississippi Delta's ancient fertile soil to Nebraska's deep pockets of the Ogallala Aquifer, from Washington's Columbia River Basin to Florida's year-round citrus lands, the pattern is unmistakable. Gates isn't merely buying land, he is acquiring food production capacity for a future where climate, water scarcity, and global disruption reshape agriculture. But the real power lies not in the land itself, it lies beneath it. Water rights, especially in the American West, operate under the doctrine of first in time, first in right, meaning the oldest claims hold the highest priority during shortages. These rights can be bought, sold, and transferred independently of land, making them one of the most strategic assets of the 21st century. T. Boone Pickens recognized this decades ago, assembling rights to extract 65 billion gallons of groundwater annually and selling a portion for over $100 million. Investment firms followed, buying farmland not for crops but for the senior water rights attached. In California, private control of state-built water banks has enabled dynasties like the Resnick family to profit enormously from droughts, selling access to water that entire communities depend on. Even the Mormon Church has joined in, outbidding billionaires to secure Columbia River rights that guarantee perpetual water security. With the Colorado River shrinking, the Ogallala Aquifer collapsing, and snowpack declining across the Rockies, the wealthy understand what's coming. In the future, water will behave like oil, except far more essential. And just as food and water form the physical foundations of survival, catastrophe bonds form the financial shield. These strange instruments, largely unknown to the public, allow investors to collect high yields in exchange for assuming natural disaster risk. If no hurricane or earthquake occurs, investors earn extraordinary returns, often 2 to 3 times those of traditional bonds. If disaster strikes, they lose their capital. What makes these bonds irresistible to billionaires and pension funds is simple. Their performance is completely uncorrelated with the stock market. Tariffs don't cause hurricanes. Recessions don't create earthquakes. Trade wars don't generate floods. In years when stocks crash, catastrophe bonds often rise. As climate change increases the frequency and severity of natural disasters, insurers are issuing more of these bonds than ever, turning them into a mainstream financial infrastructure, an arc of stability in a volatile world. Taken together, these three asset classes, strategic farmland, senior water rights, and disaster-linked securities, form a pattern. They are scarce, essential, inflation-resistant, and built to endure crisis. Billionaires aren't buying them for short-term returns. They are positioning for a future where currencies weaken, supply chains shatter, and ecological instability becomes the new normal. They are shifting wealth out of speculative markets and into the pillars that sustain human life: food, water, and resilience. And they are doing it quietly, long before the rest of the world realizes what's coming. Catastrophe bonds represent one of the most unusual pivots in modern wealth strategy, a pivot that shows just how differently billionaires think about risk. While most investors fear uncertainty, the wealthy have learned to profit from it. A catastrophe bond functions like a wager on stability. If no major disaster occurs, investors collect extraordinarily high yields, often between 9% and 14% above Treasury rates. If a hurricane devastates Florida or an earthquake hits Japan, the bond triggers and investors lose their principal. It sounds reckless, almost absurd, until you understand the larger logic. These bonds are not tied to recessions, political turmoil, interest rate hikes, or market crashes. They are tied to physical events, and physical events do not care about economic cycles. That's why in 2024, when the S&P 500 delivered mediocre single-digit returns and real estate softened, catastrophe bonds returned over 17%. In 2023, they nearly hit 20%. Even during the 2025 tariff-driven stock market correction, when equities sank double digits, catastrophe bonds rose 1%. For the wealthy, these bonds are not a gamble, they are a firewall. A layer of protection built outside the fragile architecture of traditional finance. What's even more revealing is how the market has evolved. In the early 2000s, catastrophe bonds were a niche tool used mostly by reinsurance giants like Swiss Re and Munich Re. Today, primary insurers, companies like Allstate and State Farm, issue these bonds directly, bypassing the traditional insurance ecosystem. The market has expanded from a narrow focus on U.S. hurricanes to a global lattice of disaster risks: Japanese earthquakes, Australian wildfires, European floods, even pandemics. As the climate warms and the frequency of extreme events rises, insurance companies can no longer shoulder the burden alone, so they offload it to global capital, pension funds, sovereign wealth funds, hedge funds, and billionaire family offices hungry for uncorrelated return streams. In just 5 years, the catastrophe bond market has grown from $33 billion to over $50 billion, with issuance hitting record highs. This is not a speculative bubble. It's a structural reconfiguration of how risk is distributed in the 21st century. Catastrophe risk is no longer contained within insurance books. It has become a tradable asset class, one the wealthy are adopting at rapid speed. But what truly links farmland, water rights, and catastrophe bonds is not their performance, but their philosophy. These are assets that acknowledge a difficult truth. The world is becoming more unstable, not less. Climate volatility threatens food systems, water scarcity threatens cities, and disasters threaten financial markets. When currencies devalue, farmland still produces crops. When supply chains falter, water rights gain power. When stock portfolios crumble under economic shock, catastrophe bonds continue paying yield unless nature itself intervenes. Billionaires understand that in an era defined by both ecological and economic fragility, resilience is the ultimate form of wealth. They are constructing portfolios not only for growth, but for survival across regime changes. This shift reveals something deeper about the current moment in history. Traditional diversification, the old 60-40 split between stocks and bonds, failed spectacularly in 2022, when both asset classes fell simultaneously for the first time in half a century. The models that governed financial planning for generations collapsed in a single year. Pension funds, sovereign wealth funds, and elite investors realized they needed an entirely new foundation for the next century, one grounded not in financial abstractions, but in real, physical value. That's why they now gravitate toward assets that sit outside the conventional system: farmland that feeds populations, water rights that determine who thrives and who suffers, catastrophe bonds that monetize the raw physics of the planet itself. These aren't trends, they are defensive architecture for a world entering an age of scarcity. And while these assets may seem distant, reserved only for corporations, billionaires, and institutional giants, there are ways for ordinary individuals to gain partial exposure. Farmland REITs offer small investors a chance to participate in rising agricultural values, receiving dividend income from hundreds of farms scattered across the country. Fractional farmland platforms let investors buy equity shares in specific farms, turning food production into a crowdsourced asset class. Water exposure is less direct, but utilities, water management companies, and specialized ETFs allow investors to benefit from rising scarcity without navigating complex legal districts or negotiating senior rights allocations. Even catastrophe bonds, once locked behind institutional walls, are now accessible through mutual funds that replicate the return profile of insurance-linked securities, giving retail investors a doorway into the same uncorrelated ecosystem billionaires rely on. Yet the most important lesson here is not which ticker to buy or which fund to research. It is the recognition of a global pattern unfolding in real time. The wealthiest people on Earth are repositioning, not toward the futuristic assets that dominate headlines, but toward the primal ones that determine survival. They are not acting out of fear or speculation, but out of long-term pattern recognition. They understand that every empire, every reserve currency, every financial system eventually reaches a breaking point. History shows that when those transitions happen, the families and institutions that preserve their wealth are those who hold real assets, resources with intrinsic value, independent of political stability or monetary confidence. Food, water, protection against catastrophe. These are not just investments, they are anchors. And today, in the quiet corners of global finance, those anchors are being accumulated faster than ever. Even with all this knowledge laid bare, the deeper question remains: why now? Why are billionaires accelerating their accumulation of real, tangible assets in 2025? The answer lies not in a single event, but in the convergence of many: rising inflation across major economies, geopolitical fractures disrupting global trade, currency devaluation cycles, demographic imbalances, mounting debt, and a climate regime shifting faster than institutions can adapt. The financial system that defined the post-World War II era, a system built on cheap energy, predictable supply chains, stable weather patterns, and a U.S.-centric monetary order, is beginning to strain under pressures it was never designed to withstand. And when systems strain, the elite do not wait for collapse. They reposition far in advance. Their movements signal not panic but foresight. They are transitioning from abstract wealth to elemental wealth, from numbers on a screen to assets tied directly to human survival. Bill Gates did not spend 12 years quietly assembling farmland because he wanted to dabble in agriculture. T. Boone Pickens did not accumulate $500 million worth of water rights because he misread the future. Pension funds did not pour billions into catastrophe bonds because they were bored with equities. Each of these moves reflects a single, unspoken realization. The next era of wealth will not be defined by who owns the most tech stocks or digital currencies, but by who controls the fundamental levers of stability in an unstable world: food security, hydrological access, the ability to transfer risk during increasingly severe disruptions. When nations compete for dwindling resources, when climate shocks threaten harvests, when disasters strike in clusters rather than in isolation, the ownership of these pillars becomes a form of power more influential than traditional capital. For individual investors, The lesson is not to mimic billionaire portfolios. They play on a different board with different rules. The lesson is to observe the pattern. When the world's wealthiest people begin reallocating capital away from speculation and into necessity, away from volatility and into resilience, away from what is fashionable and toward what is foundational, it signals a shift in the architecture of the future. This is not a moment for fear, but for clarity, because the pattern they are acting on is visible to anyone willing to look. Currencies rise and fall, markets boom and bust, but the fundamentals that sustain civilization, food, water, and protection, retain value through every transition. The coming decades will likely redefine wealth not as accumulation, but as adaptability. The most secure portfolios will be those grounded in real utility, real scarcity, and real resilience. The billionaires who are buying farmland are not merely investing in soil. They're investing in the ability of the world to eat. Those who pursue water rights are not buying liquid. They are securing the capacity to sustain life where scarcity becomes acute. Those who allocate into catastrophe bonds are not chasing yield. They are creating a buffer against the unpredictable physics of a warming planet. These themes are interconnected, forming a triad of preparation for a future where shocks are more frequent and systems more fragile. But the most striking truth is this: the window where these assets remain accessible to ordinary investors is narrowing. As more institutional capital floods into farmland, water infrastructure, and catastrophe-linked securities, the yields compress, prices rise, and entry points diminish. This is how every major asset transformation begins. Gold before 1971, tech stocks before 1995, real estate before 2002, crypto before 2015. The early phase always looks boring, overlooked, irrelevant, even strange. Then, suddenly, it becomes obvious, and by then, the compounding has already begun. Today, farmland REITs, water-focused ETFs, and catastrophe bond funds provide access points that may not exist a decade from now. Not because they will vanish, but because their returns will have normalized, their valuations inflated, their inefficiencies arbitraged away. None of this is meant as financial advice. It is an invitation to awareness, to see the world not as it appears today, but as it is trending, to understand that the wealthiest people on the planet are not preparing for next quarter's earnings, they are preparing for the next era. Their quiet accumulation of boring assets is not a sign of pessimism, but of intelligence. They are positioning themselves for a world where the capacity to control food, water, and risk is more valuable than any speculative gain. And history supports their reasoning. Every reserve currency in human civilization, from the Roman denarius to the British pound, experienced a moment of transition where only those who held real resources emerged with their wealth intact. Those who recognized the signs early moved long before the masses. Those who waited for certainty never found it. In the end, the question is not whether the world is entering a new cycle. It is. The question is whether you will recognize the pattern in time. Because the billionaires already have. They are not buying farmland, water rights, and catastrophe bonds out of curiosity. They are building lifeboats, not for collapse, but for continuity. Not for doom, but for durability. And while the rest of the world fixates on volatile markets, fleeting narratives, and digital illusions of wealth, the ultra-wealthy are securing the quiet assets that matter when everything else becomes noise. Their actions are a map of the future. Whether you follow it or not is entirely up to you.